Good day, Junior Techies. I'm Mrs. Brimacombe, and we are going to look at fixed assets activity free. Before I proceed with the activity, a reminder, always know how to calculate depreciation on the old, the new, plus that which we've sold. Also remember your 5 steps in asset disposal. Refer to your theory booklet if you're not 100% sure. Throughout all the activities, I will continue to reminding you about these steps. The information provided was extracted from the financial records of Bush Traders. The financial year ends on 30 June 2021. Again, a reminder, always know when does my accounting period end and when does it start. If it ends 30 June 2021, it means it starts the 1st of July 2020. If I look at the information given to us in this activity, they provided you with an incomplete fixed asset note on 30 June 21, and then you need to look at the additional information. We are going to start by completing the first question, where we need to match the word or phrase in column A with the best definition or explanation in column B. Always make sure that you know your theory. Know that the GARP principles is applied in this topic. So if I look at historical cost is number C, for original price paid for an acquisition of a tangible asset must be recorded according to this GARP principle. It means that we always need to show the original price. Depreciation is number A, a reduction in value of a tangible asset, generally from wear and tear. Tangible asset, the definition or explanation, a possession that remains in the business for more than 1 year and is used to generate an income. If I buy a vehicle, I'm going to generate an income from that. If I look at disposal, is number E, is when a business decides that the useful life of a tangible asset is over and they decide to retire or sell the asset. If we look at the last question, residual amount, it's number B, the full amount of an asset cannot be written off as long as it's in the business possession. And that's what we always refer to. It cannot have a 0 or negative value, like illustrated in activity 2. If that happens, the carrying value will always be 1. And don't forget, you always need to times it by the number of assets. Looking at activity 2, we need to prepare the asset disposal account. Now, if we go through the information, one of the vehicles was damaged in an accident and is beyond repairs on the 1st of January 2021. The insurance company paid out 85% below the carrying value, and the total loss was $16,800. No vehicles were bought during the year, and vehicles are depreciated at 20% per annum using the cost price method. So how do I approach this activity or this adjustment? I always advise, fill in the information which you've got, because it's clear there. They didn't provide you with the cost. They didn't provide you with the accumulated depreciation on the asset which you are disposing of. So if we now look at the 5 steps of my asset disposal, step 1, take out the cost. Step 2, we update the depreciation. Step number 3, we take out the total accumulated depreciation. Step 4, record the selling price. The insurance company paid out an amount, so it means bank is involved. And step number 5, indicate a loss or a profit on the disposal of asset. So what am I doing now? I'm filling in the information which is given to me. Now, if I look at vehicles, there's no addition And if we look at the incomplete tangible asset note, if there's no addition, it means that I can take the balance in the beginning minus the balance at the end, and that will provide me with the cost of the asset which I disposed of. Step number 2, we can complete the loss on disposal of asset. They said it was equal to 16,800. Now we can calculate the selling price. The insurance company paid out 85%. So if my total loss equals 100 minus 85%, it means the loss is equal to 16,800. So I can calculate the selling price by taking 16,800 times 85, because that's what the insurance company paid us out, divided by 15. And that amounts to 95,200. Next, we can now simply calculate the accumulated depreciation on vehicles by taking the debit side minus everything on the credit side. So my accumulated depreciation on vehicles becomes the balancing figure. You've got now 2 options to calculate the book value. 1, we can take 16,800. We want to calculate the 100 divided by 15 equals 112,000. If I take the cost, 160,000, minus the total accumulated depreciation, it will also provide you with the book value. Please take note, you cannot take 160,000 and say that equals the 100% and times that by 85%. The instruction clearly said the insurance company paid out 85% below the carrying value. So just make sure that you take note of that. Complete the fixed asset note to the financial statements on 30 June 2021. Take note, some figures were given if you look at the information provided. So if we look now at land and buildings, on 30 June 2021, super builders were paid 123,000 for the following: painting the offices 45,000, new parking area 78,000. The full amount has been debited to land and buildings on 30 June 2021. The total cost of land and buildings on 30 June 2021, which is the end of the accounting period, amounted to 1,820,000. The market value of the property is valued at 2.6 million. Now, very important. We do not care about the market value when we're completing the tangible asset note. The cost is always at the original price. So if I now look at this, remember in activity 2 we had a similar type of transaction with regards to land and buildings and repairs. So what is the difference now? The full amount was debited to land and buildings. 45,000 must be taken out of land and buildings and taken to repairs, because that was the painting of offices. The new parking area is 78,000, and that should stay in your land and buildings. If you take 123,000 minus 45,000, it means that 78,000 will still appear in the land and buildings. So now completing the tangible asset note, it is important to understand that 45,000 must be subtracted from the cost at the end. Do not record it as a disposal. We didn't dispose of anything. You cannot show it as additions. It wasn't additions. We cannot subtract it from the additions. It's always when you get this type of adjustment where the full amount has been debited to the land and buildings, we always subtract it from the end balance. Now we can look at the addition. The addition was equal to 78,000. So to calculate my cost in the beginning, we now need to do the opposite calculation. This means the cost at the end minus the additions equals the cost in the beginning. And again, there's no depreciation calculated on land in buildings, so it means that the cost is equal to your carrying value. To complete vehicles, one of the vehicles was damaged in an accident and is beyond repairs. We've done this adjustment now. The insurance company paid 85%, no vehicles were bought, and vehicles are depreciated at 20% per annum. So now we need to complete this in the tangible asset note. So where do we start? What can we calculate? We start with the disposal at carrying value. This was calculated in the previous question when we did the asset disposal account. Remember, I said there's two ways we can get the book value. We can either take the cost minus the accumulate, or you can simply take 16,800 times 100 divided by 15. Next, the accumulated depreciation in the beginning. Cost minus accumulate equals the carrying value. So if the carrying value was given to us and the cost is given to us, we can calculate the accumulate in the beginning by taking the cost minus the carrying value. If I now look at solving depreciation, the depreciation must be calculated on the old plus that which we've sold. So if we start with the vehicle that was damaged in an accident, so technically we are selling it, we're getting rid of it. It happened on the 1st of January 2021. So depreciation must be calculated from the beginning of the accounting period until the day that occurred, which is the 1st of January 2020. This means that we need to calculate depreciation on what we sold 20% for 6 months, and on the cost was equal to 160,000. To find the old, the remaining, we're going to take the cost 1,280,000. So we use the figure that was given to you at the end times 20%. And how do we get that figure? It's the cost in the beginning minus the cost of the asset which we disposed of. So my total depreciation for the year is 272,000. Always remember to show it in brackets. Now we can calculate the total movement. To calculate the movement, no additions minus disposal minus depreciation. Once we've calculated that, we can calculate the carrying value at the end by taking the carrying value in the beginning minus the movement equals the carrying value at the end. Very important to always know the steps in your tangible asset note. So now to calculate the accumulate at the end, there's another way that we can calculate it by simply taking the cost at the end minus the carrying value at the end, and that will equal the accumulated depreciation. If you know your basics, it's easy to apply it completing this type of question where an incomplete tangible asset was provided. If we look at equipment, 10 laptops were purchased on 28 February 2021 at a cost of 9,000 each for staff to work from home. This transaction was recorded. No equipment has been sold during the year. Equipment is depreciated at 15% per annum using the diminishing balance method. So where do we start? Disposals, there were no disposals, so we're going to say 0. If we look at the additions, 9,000 times 10, we purchased 10 laptops at a cost of 9,000, means the total additions was 90,000. So now we can calculate the cost in the beginning. To calculate the cost, we take the cost at the end, 650,000, minus the additions, 90,000, equals the cost in the beginning, 560,000. Once we've calculated that, we can calculate the carrying value by taking 560,000 minus 220,000. Next, to calculate the depreciation. To calculate on the new, it's always from the day we purchased it until the end of the accounting period, and that is equivalent to 4 months. Now we still need to calculate depreciation on the old, and to calculate on the old, we need to take the the book value, because it says diminishing balance method, that equals 340,000 times 15%. So my total depreciation for this accounting period is the new plus the old, that amounts to negative depreciation 55,500. My total movement, to get my movement, additions minus disposal minus depreciation. And now we can calculate the carrying value at the end by taking the carrying value in the beginning, 340,000, plus the movement, because there's no brackets, equals the carrying value at the end. To get the accumulated depreciation, we can take the cost, 650,000, minus the carrying value. And don't forget, it must be in brackets. Depreciation, disposal, and accumulated depreciation must always be shown in brackets. Looking at our last question, refer to equipment. The owner feels that it's not necessary to take out insurance for the purchase of the laptops, as this will just add to his monthly expenses. He feels that he would rather save the money that he would spend on the laptops and just purchase a new one in case it gets damaged or stolen. According to the owner, he would save approximately 24,000 per year. Do you think that this is a good business practice? State your views and recommendations. So here we're looking at the owner is trying to cut on some expenses, and he feels the best option is not to have any insurance on the laptops that was purchased. So what do you think? Is this good practice? No. Why? The laptops can get damaged or lost due to theft or at any stage. The monthly insurance is 200 per laptop. If you take 24,000 divided by 12, divided by, we've got 9 laptops. So to replace that laptop will cost more than 9,000 to replace. If you're buying a new laptop, prices goes up. So, is it wise not to have insurance? No, it's not. Thank you very much. I want to leave you with this quote. Yes, study sucks, but trust me, not more than failure does. Next, we're going to look at activity 4. I hope you guys have a wonderful day.